Hello everybody, welcome back to the Forex channel here. Today I am actually going to go over a simple strategy video. So I'm going to be going over the pair GBP AUD, and I'm going to go over a simple strategy which you can use to actually make a lot of money on these pairs by trading on these psychological levels and around these sort of key levels on these pairs. I'm going to start off on the higher time frame, so we're going to start off on the daily, then I'm going to go down and show you potential entries which you could have actually got on this. Before we start the video, smash the like button, go follow my Instagram on the screen there. I post there quite a lot, so if you want to obviously keep updated with all my trades, then go check it out over there. Okay, so on the daily here you can see that we are in a nice downtrend. We're still creating lower lows and lower highs, so we'll see if we can either carry on with this trend or break this trend. As you see, we've broken out of this descending trend line on the daily, so we'll see what happens from here. So we have obviously this level here at 7,800, this area here. So if we draw a line in here, we change the coordinates by using the settings tool to 78. So that will set that there. So that is a key psychological level on this pair. If you trade, you know that this is a very, very key level on this pair. So if we draw another one at 7,900, I use these as either take profit targets or when I'm looking for entries. So as you see, wick into, wick into, wick into, wick into. And now it's currently bearish into this zone here. So we'll go down to the 4 hour now. We'll see if we can get an entry on this. So as you see, price came down to the 7,800 area on the 4 hour, bullish engulfing straight up. So if you enter on the lower time frames on this rejection down here, let's see if we can have a look. So as you see, rejection to the area, push, retest, boom, perfection. So if we actually go down to the 1 hour now, and we look what price is actually doing, we can actually draw in the 1.8 area as well, because if you look, rejections, rejections, then we reverse, come up to it, little fake out here, and then we've come down again off of this sort of area. So if we quickly go forward in time, you actually see that we broke the 7,900 level and we're coming up to retest it. Rejection, rejection again. So this is when you can actually look for short positions. Okay, so as you see, price came down, wicked up to this area. You could have entered a short position here. So on this wick up here, stops, I say just above these two wicks here, from the high of this before we push down here. You know, you could have targeted down here, and although you wouldn't have hit your take profit, you still would have been up around 4.8% on this trade. If you obviously you'd have closed some partials or your stops to break even. So even if price did reverse here and came back to the entry, your trade would have been risk free after that, because you're already around 4 to 5% in profit. But if we actually look here, what's actually happened around this area. So at the start of this, so this is where the trend line was coming down, as you can remember from a minute ago. So we've come out, rejected this level, so people entering sells in the market, obviously the bounce of this level, and then price pushes up back down to this level. So we've got a break, a retest of this trend line, and now we're looking for price to react to this 79 area, 1.79. So we had that break, price came back under the level and then broke above, and we couldn't actually hold above this level here, but if we saw, we had a little bit of consolidation here, so we came into this, boom, 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 and then we did actually open above this consolidation on the Sunday. So you know, you could look for entries in this box, maybe buy at the bottom, sell at the top, but I prefer to wait for breakouts of these sort of levels before entering any trades. But as you see, we came up to the 1.8 level, rejection, pulled back down, came back again for the retest of this level, boom, came back down. So you know, if you were entering, let's say, a short position on this, You can have really tight stops with this because you can just have it above the previous wicks, and then you can target the next level. So there, boom, 4.5%. And then as price comes back up to this level, you can see that key rejections here, stops just above this level, 20 pips, and you can have your first target here. That's nice, 4.9. Second target here, because obviously if it breaks one level, then we're looking for price to go down to the next psychological level, which is down there. We've got a nice 1 to 9.8%. Take profit smash, 9.8% secured. So if you think about that, 9.8%, FTMO, you need 10% to pass. In just one trade, you would have got 98% done on the FTMO challenge. So you know, it's very, very easy to actually do this. Obviously it's not easy because you've got to notice it in real time, and that's where trading is separated from the good traders and then the 95% of retail traders. But you know, once you've been in the market for a while and you can start noticing these moves from these key levels, then it is obviously a lot easier to make money. Obviously I do trade gold mostly, so I don't really trade currency pairs, but I obviously do know the strategies on them, because even if I know the strategy on gold, it can cross over into GBP/AUD, GBP/JPY, USD CAD, because markets do repeat themselves, and what actually happens can happen again. So this trade, nice 1 to 9.8, and then as you see down here, we had rejections at this level, and we couldn't hold this level. So if you bought here, so if you entered down here after the rejection of the 78 level, stops just below, 16 pips, lovely, and you targeted here as the first level, 5.7%, targeted at the top, you know, 11.75% on a £100,000 account. If you're funded, £11,700 just from this one trade. So you could literally enter one trade a month with this sort of trading style. Although this trade did only take less than a day to hit the take profit, and you would have made 11 grand risking 1%. If you risked 2%, you would have made 13%, 23% even. Had to work out the maths then. But that is just mental. 23k on a 100k account. Mental. Only risking 2% as well. And as you see, we had this area up here. Again, rejections at this level. You could have entered after this bearish engulfing here. And then if you target this level, you know, I wouldn't target this level because risk to reward is under a 1 to 2, so I wouldn't actually have entered this trade unless I was targeting this area down here, which is a 1 to 4. And that's why using bigger stops, you can actually lose your risk to reward, and you have to target more pips. So what I've been focusing on recently is actually having like 5 pip, 10 pip stop losses. On gold, maybe up to 20 pips, maybe 20, 30 pips on gold, because of the volatility and how much it moves. But yeah, if you see here, would have hit 3.7%, 3.77%. And although we haven't hit this level down here yet, we could see price, you know, come back down and retest this level before pushing up to this level again. But I just want to show you how simple it is to just trade. You can have these marked down on your charts, 1.8, 1.79, 1.78, and if we go down even more, if we look at the 1.77 level, if we just change this here, look at that, rejection, 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 prices bouncing off this level, and then boom. If you entered down there, you probably know what I'm going to say here. So let's say you entered down here on these wicks, getting those sniper wick entries, 22 pip stop just below the previous wick, you'd have had 0 drawdown. If you targeted the first level, 93 pips, second level, 192, third one, you already know what I'm about to say. That looks beautiful. And take profit, you know, would have smashed 0 drawdown, and you would have got 12.79%. You already know. And even if you had a tighter stop just below this level here, 14 pip stop just below these wicks, you wouldn't even have been in drawdown at all. Straight into profit. You could set buy limits around this area, obviously depending on what's actually happening with price. I prefer not to use them because I want to see what's actually happening at that moment before I actually place the trade. But yeah, boom, wick, straight into profit, comes down near to the entry, but we're still in profit, and then boom, pull back down to test this trend line, boom, take profit, smash 20% on one trade. You know, if you have these small stops, big targets, it's fairly easy. Obviously 26th of January to the 1st of Feb, you would have been in this trade a few days, but if we actually look, you would have entered. It's just beautiful. It is just beautiful. I use this tool, just shows you the sessions. It's a lot easier. And yeah, it's just simple trading. So if you actually want to give this a go, maybe start back testing it. So maybe you went back to here and you saw, oh look, boom, boom, boom. We had this little bit of consolidation here, and even if you entered on the break of this, so we came back again, that's when we broke, and I think we broke and retested the consolidation here. Then you know what happened after this. Boom, boom, boom. Came back down, retested the trend line, and then boom, take profit, smashed. So even if you just back tested it and actually gave this a go, would be a good little method. And even if you just entered another position here, nice double bottom, boom, boom, entered another position here after this second rejection, targeted the same area, stops tight below this area here, so 20%, 6% from the scaling. You know, simple trading. No big indicators, like we didn't even need this EMA on here. No indicators, no support resistance, just these psychological levels, basically what the candlesticks are doing, what the bodies are doing, what the wicks are doing, and then yeah, you can make tens and tens of percentages, maybe even hundreds of percent if you repeat this, just trading between these levels. Small stops, big take profits, good risk to reward, the main thing. But yeah, I hope this video did help explain a little bit about GBP AUD and how I trade it. Although I don't trade it a lot, when I do trade it, you know, we make the profit. We make profit. I've actually traded twice on GBP AUD this year, and I've won both of them. So then the rest is just 99% gold. If you have a pair which you're mastering, stick with it. Like I'm sticking to gold and GBP AUD because we've got a very high win rate with them. So yeah, as you see, boom, a rejection at this level. Short that, boom. Let's see what happened. Although I haven't. Is it going to come down? Oh, of course it did. Like, it's just mental. But yeah, if you did enjoy, smash the like button, subscribe, comment down below future videos. I'll see you in the next one.